All right, great people. Mind Dialogue back on the scene. I just want to give you all an update in regards to what's going on. It's 11:29 a.m., July 11th, and I just want to give you an update on the gold trade that I shared with you all yesterday. I did share that, we were hitting this bottom trend line here, right? The first time, well, not the first time, we hit it a bunch of times actually, or came very close to it. So this is the 4-hour time frame, and this trend line started way back. I think this is the trend line that was responsible for kind of sending us up to these all-time high areas, right? And so we were teetering along the trend line, touched it a bunch of times, and then we just took off insanely to go get all-time highs. We recently, we probably touched this trend line like, I don't know, probably at least 10 different times. Let me see here. We got this consolidation right here, right, where we tapped it, like 1, 2, 3, 4 times just in this consolidation. It's like an ascension or an ascending consolidation. Even though we're going up, the trading is still kind of relatively flat in a sense when compared to other aspects of the chart, but you can still make solid money in certain trades depending on where your entry is, right? And so, like I shared before, we passed the discount level down here and it took off insanely. So what's that? 3, 4 times, 5, 6, 7, 8. Yeah. So we touched this, between 8 and 10 times, depending on what you count as a touch. And then we recently just hit it again just now. And let me take off the order. So currently right now I'm in the paper trade. I'm up over $4,500, almost $4,600. I initially was, they tried to attempt a lot of shakeouts. Like I was even negative in the trade at one point. And I had a stop loss, but then I just removed the stop loss because I didn't want them to go and get my stop. Now, in reality, if I was trading with real money, I would have a very conservative, meaning a stop loss that I wouldn't think they could go down and get. But also I would have to have a decent amount of capital in order for me to risk even losing that amount. But because I'm playing with essentially simulation money, I took my stop loss off because at this point in my trading journey, I'm pretty confident in where I think price action is going to go for the most part. I have a high probability of where I think price action is going. And so, as you can see, the most recent touches that we had on this trend line that dates back way back, that even sent us up to all-time highs, you can see on the 4-hour they manipulated below it. So that was a shakeout attempt. So for certain individuals who were looking to getting maybe like a longer term trade, they got shook out in this area. Now, if you took profit off of that dump, you made some money. But if you didn't get out, you got shook out off of that because they manipulated below this trend line. They wicked below it first, right? Then pulled it up, they bought it up. And then they came back down, closed below it 2 different times, and then they popped back up to close above it. That would be your answer. So if you're looking for an entry model, once they manipulate below, you wait for the close above the trend line. You can enter off of that. And as you can see, they never came back to address that trend line. Once they pop back above the close. And so, for example, let me take off the orders here. There is a fair value gap that was created once we popped back up and started taking off, right? So I'm going to highlight it here. And a fair value gap is the high of this candle that popped up, which was on the open or 6 p.m. on July 9th, a couple days ago. The volume body of this candle right? And then the low of the third. So you got a high of the first candle, the actual middle candle, right? Where you see all this volume taking place. I mean, all of these are decent volume, but this middle piece, you see this volume taking place. And then you got the low of the third candle. So the space between the low of the third candle, or the high of the first candle and the low of the third candle, that's where you get a bullish fair value gap, right? And typically the way that a bullish fair value gap operates is, depending on price action, or, you know, if they want to shake out hard, they're going to come back down to address this area or rebalance to then take off. But this momentum was so strong, they didn't even want to come back down here. And plus, they did a pretty hard shakeout down here already when they manipulated below the trend line. So they just were like, F it. They took off. Before that, right, you can see that we're coming down in this channel here. We're ping-ponging these black lines, these two like descending parallel black lines. You see, like, once we hopped into that short-term channel, or, you know, depending on how you categorize it, but this started, they hopped into the channel, I would say properly around probably a little over a week ago on the 2nd of July. Once they went inside of that channel, they started ping-ponging inside and out of it. And you can see there were some decent manipulation / shakeout attempts with these wicks that went below it, like they were coming down to address all of this liquidity. Look at all the strong buy-side liquidity that came out. Let me see if I can identify this for you. So you got all of this. Let me see here. This is a lot of strong buy-side liquidity right here. You see all these green candles? That's just a bunch of buying. Now, selling did take place in here, but the majority of trading and, you know, investing, whatever that took place here, was mostly buying. That's why you have mostly green candles. The wicks is where the selling took place, but it just kept going up, right? So you got a bunch of bullish momentum right here, a lot of buy-side liquidity, right? Now, they came down to address it, right? But at first, they came down probably about, like, if we were to measure that range, they probably stopped at like the 38 or 50%. Let's measure it to see what happens. So if we measure from this low down here at 3250 to this high up here, see, just like I said, they wicked into this 38% or 3328.7, right? Got support off of it, ended up closing back above inside of the channel here. And then they just kind of ping-ponged inside of it. And then they got back down to the bottom where we have the more important long-term trend line that's responsible really for sending us up to all-time highs. It's so strong and important that they couldn't just bounce off of it normally. They had to do a manipulation below it, because as you can see, the move that took place after they got support and came back above it was very strong move, right? You got a low, the manipulation went down to a low of 3290, and we're all the way back up at 3380. So we almost cleared 100 points in what, you know, like less than 2 days. So it's 11:38 a.m. July 11th. They made this low at, I think this is aftermarket. Well, no, it's more than 2 days. So they made this an aftermarket, which is 2 a.m. on the 9th. So a little over 2 days, they cleared 100 points. That's a nice move. If you have the capital to be able to be in a contract this long and survive the shakeout attempts and all that stuff, you know, you're making a nice profit right here. Just being patient and following your analysis on the 4 hour, right? So then they came down, they hit the 38% initially, right? They go up inside the channel, come down, hit the 50% 3 different times. They got support off of that, went back up into the channel, and then they finally came down and hit the last level that's supposed to hold us up. They wicked through it once, got support, then they came back down and manipulated below it. So it's very interesting that the um, there is confluence or more than one confirmation variable taking place, right? You got the bigger trend line that they manipulated below, and you have the last level on the fib based on that range we measured. They manipulated below that as well. So that would be considered like confluence or confirmation that they're about to make a move, right? And then you could see with like this 62% that was created, like we could create a right angle, a right triangle. I know this might be going a little bit too, maybe you might be getting a little bit more too complicated into math and all that stuff, but I was a person, I wasn't like the greatest at math, but I understood enough, remembered enough, and enjoyed it enough to remember some of the important or key elements in math and like geometry, algebra, and things like that. So if we were to make a triangle, right, using the 62%, the trend line, we can see that they manipulated below the right angle, right? And I'll show you what the right, we'll make the triangle here. Right? You got this right angle, right triangle right here. Let's change the color. Let's do this, right? So that's your right angle, right triangle. So they manipulated um right in that corner there, and the right angle is right here. So once you get a close back above that right angle, or essentially once we pass back above that right angle, we're good to go on confirmation, right? And so literally that's what a lot of, that's what's taking place here. There's a lot of right angle, right triangles. And again, this is just extra stuff, y'all. I'm not necessarily sharing this with you to like for you to fully comprehend it. I'm just sharing some bits and pieces of things that I notice when I'm looking at, I don't necessarily always look for it when I'm doing my analysis, but I notice it, if I'm just messing around trying to learn more and really understand what's going on, right? Look here. Got another right angle there, right? So if you notice, there's key things happening at the right angles of these triangles, right? Look there, right at the right angle. And a right angle in a triangle is essentially, it's one of those math constants where a right angle of a right triangle always measures 90 degrees. And an entire triangle measures 180 degrees. So in math, when they're like, okay, if they want you to find the angle of a particular triangle, if you had a right angle, at minimum you were given and knew that you at least had the 90 degrees, and you just had to figure out the other 2 degrees, right? So we have 90 degrees here. This looks like, off the top of my head, these look like they could be probably around like 45 degrees or whatever, right? So you got 90, 45, and then another 45. You get your entire 180 degrees. I'm not super certain, but a rough estimate, right? So there's key things taking place around these areas, but we'll take those off. So that's currently what's going on right now with this particular trade. Now, just for fun, I have my profit like way up here towards the top of the bigger channel trend line because I really think that's where we're going, which is up here at this 34, 37. But, right now is definitely a pretty good place to take profit. Again, you know, at one point I was in the red, then I was up a couple $100, went over $1,000 for a little bit. But this morning is when things really took off, right? And again, I think when I told you all, we had like a W pattern setting up. And so if we use the path tool function, you can clearly see that a W pattern was set up, right? Boom, boom. And remember I said I thought we were going to do this. And that's what we're essentially doing right now. Let me make this a little thicker so you can kind of see it. My bad for all the extra noise and stuff. Let me take some of the stuff off, right? So look, this is what happened. And this is the 4 hour. Initially, we're doing our analysis on the daily. So like, there's some efficiencies even all the way up here, right? I see some like you got a bullish fair value gap at the end of this move over here. So we could potentially go like right here. We could go here. It really just depends on where we think price is going. So let's see here. And look at all these inefficiencies that we're targeting here. That's why we're getting such a strong move. There's a lot of inefficiencies sitting above that it needs to rebalance before fully coming back down. So let's measure here and see where we potentially might be going, right? And look, in the grand scheme of things, again, we're on the 4 hour, but look at this small bullish fair value gap that we created right here. Let me make this green. I like to make green for bullish movement, red for bearish movement, right? So we got this small bullish fair value gap. We didn't want to go back and address because we manipulated pretty heavy down here. Closed twice on the 4 hour below the trend line and below the 62% level, which based on how we measured the range was the last level that was supposed to hold us up. So it didn't feel like it needed to come back to address this bearish fair value gap. I mean, bullish fair value gap. However, it did do a inverse measurement rebalance because it tapped into a bearish fair value gap. And that's one of the things that I noticed. A lot of times when big moves are going to occur, there's usually an inverse balance where we balance off of a sell move or downward move, right? So if I give you this right here, they didn't go back to the bullish fair value gap, but they did tap beautifully and nicely into the bearish fair value gap. And I'll make that red so you all can see the difference, right? So look, see that? They balance beautifully into that. Beautifully. And this is the bearish fair value gap that they did their rebalance inside of right there. Boom. See that? Balance beautifully in there. And again, if we were to take a fib measure from this low that was created here, right, to the previous high, which was up inside of another inefficiency up top, look what we got, right? If we go in a little bit closer and see what happened, again, they manipulated below the 50% and then pop right back up to close above it. See that here? We closed below on the red candle on this 4 hour, right? Opened up on the green, swept the lows, right? So it swept this low of the red for the manipulation to make it seem like when you're in the trade in real time, it looks like we're going to continue going down, especially when we have all this previous buy side liquidity and volume going up. You wouldn't be wrong to say, oh, we're probably going to come down to then bounce nicely into this bullish fair value gap, which coincides with the bigger trend line that we've been watching. But instead, that's how they mess people up. They balanced out in this inverse bearish fair value gap. So typically for bullish moves or, like more logical or would make more logical sense is we would balance out inside of the bullish fair value gap, but instead they balanced out inside of the bearish fair value gap, which is like an inverse basically, right? Remember, I told you a lot of this trading stuff, you almost have to think about it in reverse, right? You got to think about it in reverse because when you're trading options and futures, wherever your bias is towards, so like for me, for example, because I saw that we wanted to go up, it's not going to be a clean up move. It's going to be a manipulation down first, right? To then go up. So they're going to go down to rebalance into some type of inefficiency to then go up. And when it's going down into whatever inefficiency, that's really the most optimal places and the scariest places to enter into trades, because you're essentially going against the grain of where you want to go, but it's the best place because as prices going against you or going in the opposite direction of where you want to go, those are going to be the most optimal entries because price is going to be cheaper. You're going to get a discount, right? So you can clearly see we manipulated below the 50% of the fib based on this range we measured from 3290.3 to 33, looks like 55.7 or something like that. Manipulated below the 50%. Next green candle opened, swept those lows, and then bought it back up to the high, and then came down to the close. Next candle opened up, and then we're on and off. We're off to the races after that. So that's what things are currently looking like right now on this current move on gold. You're going to get like some hiccup in traffic right here at these highs right here because they just took out a high right here, right? Boom. Typically, when you take out key important highs from the past, you're going to get some type of refuel or reprieve, right? Cool off. They're still going to go up, but they need to cool off, right? So if we do come back down now, I would go down on a lower time frame. Let's say we go down on the hour. Let's go lower. I want to find a clean swing high. 26 minutes, they can still clear that. Let's see here. All right, so the 15-minute got a clear swing high right now. It's about 3 minutes and 20 seconds left on the 15-minute, this current 15-minute candle at 11:30 a.m. on the 11th of July, which is a Friday. And so the most recent important swing low we made, you could either do this swing low right here, which was 10 a.m. Thursday morning, or this Wednesday 11:30 a.m., right? Which kind of, started this move in a way, and it dips nicely into this bullish inefficiency. So if we were to measure from there, right, I like to measure a couple places just to get an idea of like how things are looking. So if I measure there, I want to see, the reason I'm measuring from bottom to top is because I think the move is not done. But I want to see where we would potentially come back down to refuel. And I like this area right here where this 38%, this little orange looking area here, this is a nice area for refueling. And why? Look, you see how we wicked into there beautifully and used it to go up? You have your 50% here. This is also a decent place, right? I wouldn't be surprised if they wanted to come all the way back down here, even to this 62%, which is the last level to hold us up, and they would get support off of the trend line as well. But because of how strong this move is, I don't really think they want to come back down that low, but we can, right? I'm more so looking for here. So that's like the bigger range, right? Then there was like, let's see here. We kind of got a little wedge formed right here, right? This is kind of like a little wedge right here that formed that we broke out of, right? Look at this wedge. Boom. Right? So this wedge right here, I like to strike horizontal lines through the convergence or where these two lines converge, right? And so because we're doing this back and forth inside of this little wedge, I wouldn't mind measuring from there, right? So we can measure from, like, let's say, you know, if we were to measure from here, let's see where that takes us. Again, so when we measured the bigger range, we had a 38% that sat beautifully right in this area where we can refuel. And now when we measured the shorter range, we got the 62%, which is the last level to hold us up, that also popped up in this area as well. That's also confluence or double confirmation. We had the 38% and the 62% off of different range measurements that showed up in the same area. So there's a high probability this is the area they're going to use to refuel, right? So that's what's going on right now. They're coming down for some refuel. We dropped back down to 3,900. I had a stop loss for about 1,600. So no matter what happens, I'm going to put it slightly under this low. So worst case scenario, if this trade goes against me entirely, I protected my position to where I'll still make $1,800. But I'm going to see if it can take us to this $10,000 up here. This is just for like fun, right? And we're currently $4,000 in profit. So yeah, that's it, folks. Thank you for joining. Again, it's your boy, Mind Dialogue. I hope you enjoyed. I hope you got something out of this, you know, assessment or follow-up that I did when it comes to analyzing and assessing gold. I'll try to do another follow-up to let you all know how this paper trade panned out. But again, please follow, like, if you want to continue learning and seeing new things or just getting more practice on analyzing and assessing gold. We can essentially do this on any, you know, ticker, to be honest. I'm just doing it on gold because this is what I've been messing around with. I really like the price action of gold. But if there's other tickers and assets that you want me to do analysis on, just let me know. Check out my email in the comments. It's minddialogue.business@gmail.com. If you want to set up a private session, we can talk about that. And I'm here to help you. So my goal isn't to squeeze you dry. My goal is to give you education, information, because I once was in your position. And although traders talk about that, they don't really mean it in their hearts. You know, some of them. People want to help, but they really want to make money, which is fine. There's nothing wrong with that. But if you're a person truly of service and wanting to help others and see others win, you're going to find a balance to truly allow that to happen. All right. So please donate via the Cash App if you found that any of this information that I shared was helpful, if you learned something new, whatever makes sense based on your situation is cool. Or, you know, you just continue liking, subscribing, and following my channel. You can do that as well. I appreciate all of it. So that's it, y'all. Have a great day, and we will follow up again in the near future. Thank you.